Hey, pleasure to be here. I'm John Denza with ErisX. A little background about our firm. Our exchange is a consortium-owned exchange. We are a digital asset exchange with a spot market that we launched in April of this year. Futures was launched in, I would say, December of this year. And with that being said, I'd like to start off our conversation here with James, but before I get into it, I'd like to say that it's very smart of me to have called James for some advice on fashion tips this morning. As you can tell, we dressed similarly for the event. And I noticed that you're wearing fur-lined shoes, which is a smart decision for Miami and
it's pony
80-degree weather.
Pony hair, no socks. That's the style for Miami this year.
So James, fill us in. I know it's been a very busy year for you. I think last year around this time you were talking about how you were going to be entering the space of digital assets, and TradeStation was going to be launching and getting involved in the asset class. And now you're here. It's 2020. Fill us in. Tell us where you're at.
So it's exciting. Yeah, like you said, last year we were here telling everybody we're coming. And in November 2019, we launched our crypto service. It's a true online brokerage model. We're really focused on the customer, so it's a little bit different than what's traditionally out there. As an online brokerage, our specialty really is dealing with the customer and making sure that they have access to the markets that they're interested in. We focus on aggregating various pools of liquidity. So traders and investors will come to us when they outgrow their exchanges or they're just tired of juggling multiple accounts. That's what we've been working on. It's been pretty interesting for the last year.
Perfect. Well, congratulations.
Thank you.
So I think there's a lot of, in my opinion, from the exchange side and brokerage side, there's a kind of blurred lines on what fits which model. You look at some of the exchanges and they carry, you look at them either being involved in custody, look at possibly being a clearinghouse, operating a front-end routing solution. Maybe you can give your opinion on how TradeStation views the space.
Sure. I think it's important to think about going back years now, when crypto first became an asset class you could invest in, there wasn't a lot of services you could engage with. So in order to create a service, you had to create everything from brokerage to exchange to custodian to clearinghouse. And now as things start to evolve in the marketplace, those concerns are starting to separate. And we think in 2020, you're going to see a crypto market structure that's much closer to a traditional financial market structure than ever before. When we're talking about that, we're saying that there's going to be separation between brokerage responsibility, between clearing responsibility, between execution or exchange responsibility, and also custody responsibility. And what's interesting in this is it's driven by a few factors. One is access to capital. So when you look at the various brokerage houses around the US, we hold a lot of customer relationships, a lot of customer capital. Two is regulation. The regulatory framework is going to help various firms approach the space. And three is the proliferation of services and specialty service providers. When you start digging into those, if you look at a brokerage, like we mentioned before, our whole responsibility is to make sure that customers have market access. They're able to do good quality execution. We're going to provide education. We're going to provide tools. We're really going to make sure that they have the access that they need, as opposed to going directly to an exchange where they would be a small fish in a big pond. They come to us, and we are the big fish in the big pond there. When we're talking a little bit about the brokerage, what's going to drive, so we're talking about all these different concerns separating. What's going to drive them back together and have this puzzle come back together nicely is really around familiarity. It's what we were talking about backstage is when you have various firms and they start to separate around specialties, let's say you have a brokerage firm and you have an exchange, the way that we end up figuring out how to work together is through familiarity. Very much like ErisX. As a broker, I need to find companies that are going to look and smell and behave and operate in a similar fashion that I'm used to. So I have a choice to go for a new startup, probably doing something really awesome, or go with a company that has an established operating history and a model of operation that I'm used to, something like ErisX. Mm-hmm. So that makes it much easier for us to integrate and work together because there's certain ways that we communicate, certain types of technology that we have, certain operational models that make it very easy for us to do that versus non-traditional players in the space. Second part, in regulation, the US is definitely moving towards a regulatory framework to provide some guidance on this. It's not there yet, but regulation is going to help us sort out the various proliferation of specialty services. And when you think about this, I'm going to go back to the familiarity concept for a second. Regulators are going to look towards firms that look and smell familiar to them. So if you're a firm that is used to operating in traditional markets like an exchange, like NASDAQ, AMEX, NYSE, it's going to be a little bit easier for you to approach the regulators because generally, like ErisX has done, you create these operating models that are familiar to the regulators. So it's a little easier to have that conversation with the regulator of what you're doing, what the concerns are. It just makes things easier and more familiar for you to work together. And when we're talking about this proliferation of services, all these specialty services are arising. It seems like every day now we have a new custodian, a new exchange, a new provider. And as those services expand, it's familiarity that's going to bring them all together. So can the exchange and the broker work together through a familiar model? Can the regulator, the broker, the exchange, and the custodian work together in a familiar model? And all those pieces of the puzzle are going to start to come together, and we think it's going to be a big year for 2020 where the crypto universe is going to start to look at much more like the traditional financial system in the US.
I couldn't agree more. I mean, with ErisX, we believe as an exchange, you should focus on your core businesses. When it comes to custody, we're agnostic. We prefer to work with the intermediaries instead of going out trying to build a retail participation business. But touching on the regulatory piece, we've actually personally gone out and pursued a DCM, which is to operate a futures exchange under a CFTC license. And also in July of this year, we're able to secure a DCO, a derivative clearing organization, which allows us to physically settle futures contracts. We're really excited. That's what we launched in December of this year under our new matching engine. And it kind of touches to the point of exactly what you're saying. If we're going to expect this industry to grow and expand, it's a new participation that's going to be coming in from not only the retail side, where the regulators are going to, give some of the larger firms like yourself the comfort level of bringing that participation in, as well as the institutions. I think the institutions been sitting on the sidelines, but when they hear this language and from the regulators, it gives them an ease of coming in and being able to participate.
I think you're exactly right. It lays the pathway for them to kind of engage in the marketplace. And again, it's familiarity. Can a large pension fund or a hedge fund or an institution work with whether it's a bank or a brokerage or an exchange, in a familiar manner that they're used to? Can they use technology that they're used to? For example, is it fixed or is it a REST API? Do they do fully funded trades versus something more capital efficient like a regular settlement, a net settlement model? Those are the things that are going to help advance the space. But what happens there is that all of these things require us to have more and more trust with each other. And as financial services firms, we are built on trust. And I think that helps us to offer more credit and more flexibility versus the traditional model, which was fully funded on the trading side.
You really touched on an interesting point there. I think that there's that lack of standardization of APIs and protocols and even risk and KYC and AML across the different platforms, which makes it an extremely heavy lift for somebody like yourself to be able to navigate those waters and being able to understand, how to integrate with all these different pools of liquidity. But speaking of pools of liquidity, would love to touch base and hear your thoughts about, the proliferation of dark liquidity and OTC liquidity versus the exchange and being the lit markets.
Sure. So I think I want to touch more first on the kind of standardization of the tech.
Of course.
What happens for us is when we engage with somebody, and I think we talked about this last year, and it's starting to evolve, where somebody wants us to integrate with them on Skype, or they want us to integrate with them on REST API, it becomes really hard. And that's part of that kind of technology model familiarity and the operating model familiarity that we need to kind of standardize. And so talking with ErisX or even CME or other firms, it helps when they have that familiar model. Let's talk a little bit more about some of the products that are getting offered, because I think that's interesting, and then we'll come back to your question. Mm-hmm. When you look at, like an example would be the new CME options contract. For us to offer the CME futures options, it's relatively easy. When I say us, I'm talking about the TradeStation brand overall. It's really just turn switch on, and it's in the platform. When somebody like a Binance or Kraken comes to us and they said, we have this amazing futures contract, it's an entirely different pattern for us. There's a new operating model we have to figure out. There's a new custody model we need to figure out. There's a new technology model we have to figure out. And then we're not really even sure how they actually operate on the internal, because there's a big difference between a clearinghouse that's going to guarantee the other side of our trade or just put a slush fund together for the other side of the trade, or just say, hey, it's between you and the counterparty, we're out of it. And that's important because when you go to buy your cryptocurrency, a lot of people talk about custody, but very few people talk about when you buy it, are you actually going to get it?
Yeah, no, I agree. There's a tremendous difficulty level in understanding regulation in different geographies. I mean, the U.S. operates obviously different than Asia. There's different regulatory rules and requirements. But touching on your point, I couldn't agree more about the clearinghouse approach. You know, at ErisX, we actually sit as a clearinghouse, and we are the buyer to every seller and the seller to every buyer. And we also pre-fund accounts. So, you know, for somebody like TradeStation, that eliminates that counterparty risk and fear of, you know, not being their customer not being made whole on their trade.
Mm-hmm. And that goes back to that familiarity, because it's a little easier for us to work together, knowing that you have some guarantee on the other side of the trade. As brokers, we're responsible to that customer, and if the customer places an order and the counterparty fails to deliver, I'm on the hook for that. We have to make sure that that customer is whole. So it's easier and familiar for us to work with counterparties that are going to guarantee the other side of that transaction versus a counterparty that's just going to say, hey, work it out between yourselves.
I couldn't agree more. So if, you know, touching on what you were saying, you know, as you know, there's all these different programs between APIs out there with WebSocket REST, and even from a matching engine approach, you've got people putting their matching engines in the cloud versus bare metal and being in, you know, some of the data centers. You know, my background's always been in the capital markets approach, similar to what TradeStation's originated from. And, you know, I think I see this ushering or a wave of some of the traditional ways that we view the marketplace from a capital market standpoint, where the exchanges have been in those, you know, the data centers in the past, where there's that system reliability. Do you have some thoughts on that?
So for us, I'll answer it maybe in two ways. From a broker perspective, it doesn't matter to me. It really just matters, can we get the best price for the customer? And we'll plug into a variety of different venues, whether you're co-located in New York or you're in Amazon Cloud. Doesn't really matter to us. It's really how quickly can you get us the quote and how quickly can we make sure our customer order gets there. If you're an established player, you probably have some type of physical location already in a data center. What we're seeing is a lot of the newer companies are definitely using Amazon Cloud. We do use Amazon Cloud for a variety of our services. And I think it gives them a nice flexibility and a nimbleness to be able to grow and develop. So again, for us, it doesn't matter to me as long as I can get the quote and I can get the order out there as quickly as possible.
Understood. So I think another area that I can imagine being a concern is the level of market fragmentation that's going on right now and the explosion of new products that are going to coming into space. You know, there's only going to be a set number of, obviously, Bitcoin that's going to be mined, but I think that these other services and products and the explosion of the exchanges on the landscape right now is a perfect opportunity for TradeStation Crypto to actually get involved and be able to make the best determination on the market.
I think there's good and bad in this whole scenario where there's a lot of different services, which is great, this choice. And people will congregate around the choices that they like and helps markets to figure out which is the best services. The bad side is sitting here as a company that needs to figure out where do we invest our dollars, where do we take our customer trust and invest it. Do we go with, which custodian do we go with? Do we use a warm or cold storage model? There's pros and cons in all this fragmentation, and it does make it difficult for us to figure out where the best place is. So we tend to hedge our bets and look in a few different areas. But the fragmentation, I think, overall is good for the customer because we're trying and experimenting with different models, different execution models, different clearing models, different brokerage models, different asset classes. Eventually, it will all come back together, at least in the US, and it will center around something that becomes more simple and easy to use for the customer.
And that kind of goes back to the other point that I wanted to ask. You know, what's your view on, you know, with all of the expansion usually is followed by a consolidation. Do you have an opinion or thoughts on that?
Yeah, absolutely. I think it goes to what we just said before, where the volume and the revenue is going to consolidate around the preferred services. There's so many service providers, there's not enough interest to go around, so we got a ton of supply of service, not enough demand. And so what happens is each one of these service providers has a hard time to make their revenue. So if you're a service provider that relies solely on revenue from crypto, it's going to be pretty hard until the market consolidates. If you have a diversified revenue stream where you can make money on like transactions or monetization of assets or subscriptions, you should be able to sustain a longer runway as the volumes are low and the amount of revenue to go around is low. But consolidation is inevitable as as volume starts to consolidate around the preferred services. You're going to start to see those services have more revenue, be able to buy up some of the smaller players. You still see it now in normal financial services, or traditional financial services, I should say. You're seeing the bigger banks buy up the brokerage houses. You're seeing bigger brokerage houses buy up the smaller brokerage houses. You're also seeing that in crypto, where you're starting to see a lot of partnerships, a lot of strategic alliances. Eventually, those will consolidate around into a handful of firms that can deal with the regulation. They understand how to work with the traditional players as well as the non-traditional players, and they're just familiar. They have a familiar way of engaging, and that's where the customers will start to centralize around.
I think we could both be in agreement that kind of leads back to your comment about familiarity, where the consolidation is going to move and gravitate towards what people are familiar with and how they deal with the regulators and so forth.
Yep. I think there's possibly two ways that consolidation is driven here. I think that one, there's an orderly fashion. People make revenue, they buy the smaller companies, and everyone starts to standardize around models. I hope that's the direction that we go. The alternative is, not to be a doomsgloom, is that with this expansion of services, expansion of products, we have some type of market event, and we're not structured yet as an industry to handle those market events. Maybe there's a credit event that happens, and essentially the music stops, and someone has to figure out where all the crypto assets are. That's what's been happening now, is that we're building a lot of derivative products on top of crypto assets, and so money is coming into options, futures, other types of derivative products. So we need to make sure that there's an orderly way to handle those credit events, and that would be the ideal situation.
That's a great point. I mean, with us, ErisX, we actually launched a new matching engine to be able to handle load in December of this year. Do you have a thoughts that you could share with the audience on planned and unplanned events? I mean, you've got the halving event that's going to be coming up in May, and then you have geopolitical events that have happened since the beginning of the year, unexpected. How does TradeStation account for that and support it? It
goes back to operating under our current guidelines and operating models. So TradeStation Crypto really took a lot of value from the experienced brand from TradeStation. TradeStation has been around for 25, 30 years. We've been in financial markets, and we've seeded the company with experts from those traditional markets. So we function and operate underneath the overall TradeStation brand in a way that we would typically function and operate in the traditional markets. And that's the only way we can really get comfortable with providing a quality service to customers. And so what will happen during market events, we are organizing ourselves in a way that we're doing the best thing we can do for consumer protections. I think it's hard for us to predict because we're only one piece of the puzzle.
It's safe to say that you took some of the knowledge that you've gained over 20-something years of being TradeStation and shared that knowledge and experience and carried it over to your launch of crypto then.
Oh, absolutely. Underneath the TradeStation brand, we have the cybersecurity policies, the operating policies. We have all of the existing infrastructure and procedures that we're able to draw inspiration from and leverage onto the crypto entity and provide a good quality crypto service.
Perfect. Now, I know that you've got some great and exciting things coming up with TradeStation that, with how you've branded TradeStation Crypto and the launch of it. Maybe you could share the audience with some of the exciting things you have going on with this recent launch.
Sure. So we got about 30 seconds left. I won't give you the huge sales pitch, but we hope you all come and take a look at the crypto service. We think we'll probably be the last broker that you'll ever need to use. Come take a look at it. We've got aggregated liquidity. We have a pretty good show special going on. If you check out the Wi-Fi, you can log in and see what the show special is. It's funding a small account. You're going to get $50 back, so it's pretty good. We think that we have a good positioning as a broker where we're able to connect you to multiple different venues, so you don't have to have relationships and funded accounts at those different venues. We're going to provide you the best price execution on our connected venues, and we're going to take a lot of the hassles away from crypto trading, so you don't have to worry about managing your own wallets, managing your own custodians, managing your own relationships. Come check us out. We think you're going to like it. And thank you very much for your time.
And at ErisX, we're excited of the partnership and to work together going forward. Thank you all.
Thank you.
We appreciate the opportunity.